Annette is with us today from Synergy Credit Union, and Annette is a loan supervisor. And Annette, we get to talk today about applying for a loan. So this is not a fun process for a lot of people. Let's talk about credit scores, first of all, and how, what exactly is a credit score?
Okay, well, a credit score is a number, and it's usually between 350 and 800, and it basically just represents your credit worthiness. Okay, basically it provides a snapshot of how likely you are to repay your debts on time.
Okay.
Yeah. Beacon score is also known as FICO score, and it's based on consumer credit files from two national companies. We go by Equifax and TransUnion. We use both companies because some places report to one, some places report to others, some report to both. So we like to pull both just to get a snapshot of your entire financial picture.
So what's a good credit score?
A good credit score of 720 or more is considered prime. That's where you really should have no issues getting credit. If you have something under 550, you could actually be declined for a loan just because of your score alone.
Okay.
And then somewhere in between those two ranges, it'll just have a huge impact on the type of interest rate that you can get.
Oh, okay.
So obviously the lower your score, the more it looks like issues with repayment to a lender.
Right. And what are some of the things that would impact that credit score?
There's several different factors that make up your Beacon score. One is payment history, basically making all your payments on time every time. One late payment can affect your credit score up to 2 years. So I always tell people, even if it's that minimum payment on your credit card, make it on time every time.
Okay.
Yeah. We have capacity, and this is just one of the areas where of all the credit available to you, we like to see you're not using all of it. So, you know,
not maxed out.
Not maxed out, exactly right. Yeah. The length of credit. Good credits good credit habits over a long period of time will boost your score.
Okay.
Yeah. So new credit, opening new credit cards, even retail stores. Basically, we just don't want you going out applying for a whole bunch of credit all at once, because then it looks like credit seeking, and that'll bring down your score.
Okay.
And then just having a mix of credit. Having a mix of credit, a combination of different types of credit boosts your score as well.
Okay. And what are some of the ways you can track it? Or is there just, do you have to go through the financial institution, or can you do it yourself?
You can, absolutely. And you're entitled to one free credit report from each of the companies a year.
Okay.
They'll give you a printout. It doesn't include your score. If you want your score, you'll have to pay a little bit extra for that. But I do suggest getting that one free report every year, because you can just keep track of everything on there, make sure everything on there is yours, and make sure there's no fraudulent activity and everything's reporting correctly.
And now if you do see some fraudulent activity, because I know some people, especially with online banking or automatic payments, just comes out and they don't check. So if you do see something that doesn't look right, what should you do? Immediately
reach out to the credit reporting agencies, and they'll help you rectify it. They'll let all the credit companies know that you know, that has lent to you, and they work together to get it fixed for you.
Okay, great, thank you. And we'll be back again and next hour talking more about credit scores and fraud and how you can get everything kind of wrapped up. So thank you very much for joining us.
Thank you.